The broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, good morning. Can everybody hear me? Awesome, awesome. We'll get started here just in a couple minutes. I just wanted to make sure everything was up. I am pumped up. Where's everybody coming in from today, just so I can get an idea what time it is where you're at? I see we got some people from the U.S. today, which is awesome. It was pretty light yesterday. You Aussies in UK, you've had your lunch already, so. Hey, Dakota, coming in from Tulsa. Gary back again today. Hopefully, Clay put on a great session last night, and our other presenters yesterday. Dallas did a session. Josh Grellner did his first session yesterday, so things are moving along. We've got another full slate today. Pretty excited about that. And like I said, we'll get going here in about 2 minutes. We'll see if we get a few more people jump on. I think we got the link worked out a little bit better than we had yesterday. So we'll talk to you in just a few minutes. All right, I'm back. Can everybody hear me? Okay, my bad. So Power 62, in the chat box while I read the disclaimer here, let me know what you're doing with the 62 or not. And we'll get into the basis of it today, how to use it a little bit, and then I've got a couple charts that we'll go over and take a look at. So Steve has asked us to help protect ourselves, him, and you to make sure that we read through the full disclaimer every time. So here we go. Good morning. I don't want to see the little orange triangles that you're clicking away, but this is kind of like the when you get on a plane and they do the presentation for you, the safety presentation. Risk warning and trading disclaimer. Trading the foreign exchange on margin carries a high level of risk. It may not be suitable for all investors or traders. There are no guarantees of profit, and most Forex traders lose money trading. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts or uncertainties. This presentation and all of its contents, including past trades and potential trade setups, is for educational and informational purposes only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantees of profit of any kind. The presenter is not a licensed financial professional and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting, or acting upon any information in this presentation. This is not a solicitation to invest. Hypothetical performance results may have inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. Thank you for going through that. If you need to take a screenshot of this, please do. We will put it up at the end of the presentation also. All right, so let's get into the 62. Give me 1 second here. Let me see what we got going. Love the 62 for some reason. Price does like to bounce off of it. Looking forward to your class. All right, I think you will like this, Doug. All right, here we go. Okay, power 62. What is the 62? So when we talk about the 62, it's a moving EMA average. It's the average of price on time frame for the last 62 candles. So let's move up one more here, go to the next slide, and if we look here, give me 1 second here, I'm going to pull up ink to go, I forgot to. All right, so if we look here, this is a 5-minute chart. And when I run my EMAs, I like to put several EMAs on the chart. It's just the way that I prefer to run it. You want to put at least the one period time frame that you're on. on the chart, which would be, in this case, your purple wave right here. But I also like to run the 10-minute wave, which is the yellow, and then the orange is the 15. And then, of course, our system, if we're running tab 29 or fast 33, kind of a 30-minute system, so we've got the 30-minute EMA running through the middle also. And then this white line is the 13 EMA for the 5-minute. So it's the last 13 candles. The 1-minute EMA is 12.4. And so I color this white because the standard color pattern that Steve has is to have this yellow, but then it can get confused with this if they're turning over. And so I'll color it white, which is real close to the 1-minute. So I'm really getting a representation of, on a 5-minute chart, of the 1-minute, the 5-minute, the 10-minute, the 15-minute, and the 30-minute all at one point. Does that make sense? Yes, this is the HT ATF indicator, which gives us the blue line and the white line. So this is the 1-minute here. That's the 5-minute there. That's the 10-minute here. And that's the 15. And then the 30. And the HT ATF indicator is giving us this, which is the local 62, right? And it's given us this, which is the local 13. The green line that's running through there is actually the local 5, which we'll talk a little bit more about and how to use it in the next session. Probably won't touch on that today, but we'll cover that next week. So if we're looking at the HTF, is everybody here using the ATF indicator, the HT ATF indicator? Okay, good. And good note, Liam, there is a training. If we've only got one or two that aren't. And there is a training in Scans, Quarks, and Fibos group for it and how to get access to it. It's got more power than I have here. Even I don't, just for simplicity, I don't have the harmonic targets turned on. Just we'll work into that as well. The HT ATF indicator stands for harmonic targets, all time frames. So on time frame, it will give us the 5, the 13, and the 62 EMA for that time frame. And then it will also give us the harmonic targets for that time frame and the previous set that are available automatically. We don't have to figure them out. The 10 and the 15 and the 30, I'm putting on here by figuring out the calculations on them, and we can go over that towards the end of the session also. So what I like about this, and we can see by the chart, is that it's kind of telling us what price is doing. So to go back to my first slide here, the 62 is the average of the last 62 candles. So if I'm on a 5-minute chart, I'd be 310 minutes of time, but it's made 62 5-minute candles. And Steve, early on in his 16-year career, spent a lot of time with the 62. And actually, a lot of what tab 29 fast 33 does has some of this taken into account. When you know what's going on, when you look at what's happening in the plots below and what's happening with the EMAs, there's definitely some congruency there. It's not 100%. Obviously, there's 29 indicators or 33 indicators, but it is part of that. Let's put it that way. So what Steve found is that price, and when we say 62, we're really talking 61.8, which is the golden ratio Fibonacci. So what he found in studying, I think, around 2,000 trend moves over all pairs, not just one pair or two pairs, is that price would come back to the 62 EMA more often than any other EMA, because you'll find a lot of trading programs that are based on the EMA 20 or the EMA 50 or the EMA 100, and if you're trading stocks, you'll hear a lot about the EMA 200, the 200-day moving average, and that's what exponential moving average is what EMA stands for. So it's a moving average. Every time there's a new candle, you take that last 62 candles, figure out the average. That's where that plot gets put. And so Steve's very big on studying what things do, not just taking it for granted. And he found the price kept coming back to that 62, kept coming back to that 62. It won't always be a direct hit. There may be another potential support and resistance line there that it reaches out to hit, or it comes a little bit short, but it's coming back to that 62 to then take a breath, as Clay Taylor would say, fuel up to take off for the next leg of the trip. So the other thing, or the next thing is you want to pick your time frame. When you're trading, when you first start out, you're just trying to get used to what's going on in the charts. You're trying to you think you got to take a trade every 5 minutes. Part of overcoming that FOMO is figuring out, okay, I'm comfortable I do a lot of 5-minute, some 15-minute stuff. Where that comes in, or how I chose that, is what are the frequency of the trades? Because the higher the time frame you go, the less frequent something is going to repeat. And ultimately, we're looking for a pattern, whether it be in the price, or what we want to see is in price, and then we want to use FAST 33 and tab 29 to confirm that pattern, because it's a great confirmation tool. The other thing to consider is, okay, yeah, it's great. On the 5-minute, you get more potential trades, but the wavelength's shorter. So a 5-minute wave, let's say you're doing a buy, as price goes up, it's only going to go so far before it does its first retracement, before price pulls back and then goes up again. And so we want to be realistic about how long that wave is. How many pips can you potentially get on an average trade? Where a 5-minute might be anywhere from 5 pips to 15 on a long 5-minute. And of course, you are going to get somewhere when you place that buy, it's part of a 15-minute wave that's taken off, and so it runs further. But on average, you're only going to get that 5. It's going to be a 5 to 10 pip trade more often than not. If you're trading 15, you're more in that 10 to 15, maybe 20. Just depending on what your higher time frames are doing as well, as far as impulsivity. So you kind of need to find a lot of it depends on, do you have the chart time to sit down? Are you trapping trades? And just, when you get an alert on your phone, you go look at it, which can allow you to use a higher time frame potentially. And then the third thing is a slush. The higher time frame, the more slush you get in the turnaround. And it's not always as precise unless you're using trend lines, pitchforks, something that's given us a hard wall to bounce off of, in addition to the EMAs. And then lastly, what are the EMAs telling us? So let's go to the next slide here, which will kind of give us a little better idea. That first part there, did that make sense to everybody, or do we have any questions on that? All right, all right. What I like about the EMAs is it tells me when I'm going to trade. If we look up here, so much of is when you look at a chart, you're not trying to create a trade, and it's so much easier on your head game, because you want to know, if we're looking here, when we're up in this area here, and the EMAs are kind of jumbled, price is kind of consolidated, even though there's a little wedge here. For me, I'm not trading here on this pair. Now, I have two charts set up. I run 3 screens. I have three up charts set up with 6 pairs total on a 5-minute chart. And out of those 6 pairs, there's always going to be at least 2 of them where the EMAs are starting to do this, where they're starting to open up. Those are the pairs that I'm looking to trade. So when prices like this, and sure, yeah, there was a convergence here. Price was coming up. If we look here, we had if you watch Clay's session last night, this is a fairly strong trade right here where the 5-minute pulled all the way back. But look at the EMAs here. They're all jumbled up. The one was all the way underneath them. And to me, that's not a clear enough trend. I want to trade with high probability where I know what the trend is. And so here we're on a 5-minute chart. So what I'll do is, even in here, when you first, your RAS is like, wow, there's a great move right here. If we look, what we had was this again is basically the 13. So you're looking for a 62, which is on time period, is this line right here. So that's our 62. And then this is our 13, which a lot of people will color yellow. Again, I leave it white just so it's easier on my RAS to be able to see different colors. And so if we see here, we went above, and then here, right here, it crosses back down. And then it pulls up and it hits the 62 right here, the 13 does. But again, we're all kind of jumbled up. And to me, this is really kind of the start of the move. And if we look down here, this is a strong trade. On the 1-minute chart, this would be at extreme, and the 5 minutes at extreme. So we have this is a 10-minute harmonic wave convergence right here. And what's cool about it is the 30, even though it's moving up a little bit, is only at about 25 right there. So it would be with other, with the support and resistance here, this would be a qualified 10-minute trade. But what I'm looking for is once I break down and price pulls back to the 5-minute, that's where I'm looking. I'm looking for this, a pass and check, if you will, of the 5-minute. So when it comes back up here, as we see, it pulled past a little bit, but it tagged the 30, which in our trading, is even stronger. We love, basically price here came down. It was above the 30 this whole time, went below the 30, came back, tagged it. And if we look in our indicator here, boom, nice strong 10-minute convergence, 30s in the power zone, it's in the middle, so it's not influencing it. If the blue wave, the 30 here, is way up high, I don't take that trade because it could very well push higher. But here it's in the middle. So this is where we're looking to get in here. And again, as far as waveology, we've got what, 3 or 4 courses on waveology. Make sure you're getting on them. Clay's doing a great job with them. Muncie's going to do one later this week. And Josh Casey's going to start doing them also. He was off this week. But Jess Martin, definitely a correction move right here. You know, we're getting a correction. So we had an impulse down. And it's correcting here, and it's getting ready to impulse again. So what it was is we had a convergence here, and then this was the retrace. And at this convergence, it's going back down to another one. This was a 30-minute convergence, sorry. I look at this so often that sometimes I need to slow down to explain it a little bit better. It retraced to a 5 and 10-minute convergence, which is, if you've been through, let me ask this question. Of the people on today, how many are using tab 29? How many are using fast 33? So put 29, 33 or 0. Okay, so we've got a good mix. And everybody's basically using one or the other way, the way it looks. So, okay. So here the advantage of tab 29 here is it's showing us this 10-minute wave, right? And on a 1-minute chart, you know, it's obviously going to be at extreme as well. If we're just looking at tab 29, we're at a little bit of disadvantage because we don't know what the 30 minutes doing. You know, it's cycling up here, but we don't know what it's doing. And the 15's kind of in the middle. You know, it's funny because the 15 can act like the 30 sometimes. Sometimes it can act like the 10. So we come up, we hit the 30 here. On a pass and check, this is, of the whole move, this is one of the strongest moves right here. It kind of sets up here some, you know, this is obviously a good move as well. But when we come down, we come back and check it. And what we'll find if you start looking, and this one's not, yeah, it's fairly clear where we came down and we caught the 30. Here we're out of order just a little bit still. But our 1, our 5, our 10, and our 15 are in order. They just haven't all crossed the 30. And you'll see that when your EMAs start to cross the 30, like here the 5 did, here the 10 is, here the 15 is. When that happens and they start to open up like this, you're going to get a very strong move, more often than not. What you'll also see is that this pullback went to the 30. It pulled down again, and it went to the 5. Excuse me. When your EMAs are in order, a lot of times what it'll do is it'll do a 30. It'll pull down. It'll do like a 10 or a 15. It'll pull down, and it'll do a 5. And a lot of times that 5 is the last one before it makes that last really good wave. And it pulls out from there. So here we hit the 30. Pretty good entry there. We come down. Price pulls back to the 5. At that, again, we're at a 5-minute extreme. So, you know, qualified 30s even lower. We had a little bit of a 30-minute convergence right here. So if we see that, we want this to be an extreme, or on the 1-minute chart, we want power 10 to be at 80 before we take this trade. We don't want it short like this. It's just a lot higher probability trade. All right, let's see here. So just using the EMAs, as you can see, you know, sometimes it'll bounce off exactly. Sometimes you're through a pip or two. You know, when you turn on, the INS, there might be an INS line right here. This is actually an INS line. It's static chart support, SCS. If you have tab 29, it's a great one. I leave it on my chart all the time. We can see right here, price hit it exactly. It's a great one to catch 30-minute convergences, actually. If it's in the area, they're real spread out. It's based on a 1,000 pip grid, but it's Fibbo based. If it's in the area, price is going to interact with it in some way, like probably 95% of the time. But I want to say a little bit blind here. So if we look at this, what other tools or what other ways could we use to help us get a better entry, get a higher probability entry than just using? So the EMAs are telling us, especially from this point, price is going down, we're opening up, the 1 minute pulls back here, and from there it really opens up. So if we're looking at this and we're like, we know we want to trade, in this area from here on specifically, because we got spread, we're below the 30 on price. Scans and forks, yep. This was a wedge here, a wedge breakout. This probably would be a called wedge. Let's take a look at, let's do this. This will be the same chart. So this is the same chart we were just looking at with a 5 minute. I did it in white. If we're doing 5 minute, usually we'll use the purple color, but I did it in white just so we could see it easier. And this fork had a couple different ways it can be set. As you can see, it's got a couple wick throughs on the, like right here. Whoops. We got a wick through right here. Pitch there. So this is a 5 minute Gregor best fit pitchfork. Couldn't get it. Even pulling back here, there was a high. It just didn't fit the way I wanted to. We got there and there. We got a touch here. And so I moved it down a little bit. This is that first pullback right here, that pass and check, or this is the pass and check right here. So this one's bouncing off the 30. It's not bouncing off the fork, but I'm at a 10 minute here. And you're not really, you might have a trend line there. But right here, we're coming up, and this is, I'm 5 pip scale, so this is all really a pip and a half, 2 pips. So we're coming up to it. We're at the 5 minute. We're at the pitchfork median. We're at a 5 minute extreme, which your 5 minute extremes, they're going to turn around in 2-3 pips. Especially you go down to the 1 minute chart to execute. And then you look at, coming out of there, it's bang, and this thing drops quite a bit. I looked at it, putting it smaller on the chart, but we couldn't see it as well. It actually goes down to like a 3.0 warning line of this fork, exactly to it. So the 5 minute forks are a great way to catch it. And you'll notice that when I set this fork, I set it on a swing. So if you look right here, swing low to swing high, and the 13 crossed my 5 right here. Plus it had a relative steepness. It wasn't too steep. I wouldn't want it much steeper. But so you're looking in, once we set that fork, these EMAs were running right down the middle of the fork, which Clay kind of touched on in one of the session last week, how when you're setting your fork, especially on time period here, the 5-minute chart, we'd want the 5-minute EMA to be running through the fork. So this is a good one to, we were able to catch, this obviously, if we call this 1, 2, 3, I'm not looking to trade this here. Maybe if I did, it'd be slush. But coming back this close to the 62, I'd probably be trying to tag the 62. But this is, you catch this trade here pretty easy. But more than anything, that just the way when they start opening up like this, this is where you're looking to be in the ball game. Any questions on that? All right, so we've got the power of the pack move, which we talked about a little bit. I'm going to go through, I'll probably pull up a live chart here, and we'll look at that a little bit more. Patience and persistence. This one is, it's really the key to trading. If we're not patient and we don't know exactly what we want, we start to take trades that don't really serve us in the long run. And it's when you start to study how to program the brain, and if you haven't been to the Trader Physiology video, you'll get yourself there. It's Go in the Scans, Forks, and Fibos. I believe it's there. It's about 2 hours, but I think I've probably watched it 8 or 9 times. After you've watched it a few times, you can put it on in the background and listen to it as well. But Steve just goes over how your mind works relative to trading. And the most important thing is to figure out, okay, when this happens, the indicator shows me this, and when price action does one thing, and I'll show you a specific example here in a second. When price action does one thing, my indicator shows this. This is the trade that I want to take. And once you've done that, once you've figured out what that is, and it fits into your trading, you have X time to sit down and work on the charts and or do your setups, and you can catch it with an alert. You want to go and take 50 to 100 of those and create a spreadsheet, that has, the pair, the time, type of move, buy or sell, pick pips gained, and, based on, when you're doing those, you're doing money management consistently, because if you do one thing one time, one thing another time, you just scramble your RAS and you give yourself mixed signals on what you're actually trading. And it's a consistency. The only way to reprogram the brain, I don't think we have anybody that's under 7 years old here that's still in theta phase. So the only way to reprogram the brain as far as trading is repetition. And it's building that volume of trades where you need to have an undeniable belief. So that when you take a trade, win or lose, if you take 20 trades, you're going to make pips. Actually, if you take 2 or 3 trades, you're going to make pips more often than not. All trading disclaimers, go to www.tradingdisclaimers.com. You can see in the lower left there. But you need to know what's going to happen. You're never going to win them all with trading. That's one of the hardest things to overcome. And I think one of the hardest things for me to overcome was I like absolutes. And there is nothing about the Forex that's absolute. So you need to be realistic about what's happening on the charts and know that over a volume, 85% or 80% or whatever your journal shows you, 80% of the time, X is going to happen. 20% of the time, Y is going to happen. And be okay that when Y happens, That's just part of the forex. So, Taj, time of day, hour, time frame. Um, you want to know what time frame that you are trading on to know what size of moves you're looking for. Time of day is big. Obviously, a lot of it depends on what type of move you're trading. If you're looking for a burst move, which a lot of what tab 29, fast 33, where we're getting in tight, we're looking for a burst move, then you want to be in markets that are giving you, that price is moving. It's giving you a good, what we call a price channel, which would be during New York session, or when London and New York overlap is generally the best, or the beginning of London session is strong. I don't usually trade in the U.S. from, let's say, noon or 1 o'clock Eastern until Asian sessions open. I don't even really look at the charts. Sometimes price will make decent moves there, and sometimes price will just sit and wander. As you get closer and closer to the close, you get bigger spreads. There's just not the volume in the market, so to me, it's not the time to be in there. I have the flexibility to be on the charts when it's good. So let's take a look at the power of the pack move, because again, you want to get it to where you're more so looking at one thing. Let's see. Let's get rid of that for now. Let's bring this in. Oh, that's a wiki mess. Let's not bring that one in. All right, EU, not much better, but you can kind of see here how the euro made a pretty good move yesterday. So it was a strong move down. As long as these are staying open, and you can kind of see again, the 1 minute's traveling along with it. Price is going to continue in that direction for the foreseeable future. Here it's starting to pull back again, made a convergence, but the 1 minute hasn't crossed the 5 minute 13 hasn't crossed the 62. So until it does, we're still kind of continuing down. And this one didn't really make. It came out of a consolidation. There was some news in here too, so that was part of it. So as we came out of this one, we didn't really get a strong pack move. The first time was at London Open yesterday. But you'll see when, again, convergence here. Let's get my pen out. Came down, there was a convergence here, and then it made another one here based on the fact this is a lower low, right? So inherently it's a little bit divergent, but it is a convergence. So this is a 30-minute, we're assuming impulsivity is up here because we had a 30-minute convergence. But again, Clay covered this really well last night. So if you want a good 30-minute primer on this, check out his session last night, especially the second half of it. He went over a couple of trades specifically. But here, this is a qualified sell into the buy. At this point, we're up into the 5, we're even past, getting almost to the 10. That's why I like the 10 and the 15 on my charts, because a lot of times this stronger move will pull up and hit the 15 and then take off. If I see the 1 minute or the 13 EMA here get inside of the 62, actually cross up, I want to hit at least this or even this. And we'll go into some future sessions on 30-minute 62 stuff and some of the things we can look at, again, that Steve has studied, and I think Muncie and Clay covered it in their 51362 class on, if we're coming from 34 pips into here and we get to 21 in, there's an 87% chance that we're going to the 62 eventually. So we see this here where it comes back into the 5. That's a pretty good trade. But see how it comes down and it comes right back to the 5 and tags it again? This almost identical to what happened on the other chart that I was showing you, and it wasn't the euro. I was just making sure. But we can see here where, again, convergence pulled up. But here we're extreme, right? So we're saying, oh, this could be a trade, but I'm wiggling around in no man's land. Here, I made it back to that EMA, and I'm extreme. And on the 1 minute chart, power 10 would be right up in there also. So I like this trade right here. We look at our EMAs, they're opening up. A lot of times when you see the wedges, if you're doing the wedge alerts, you'll see a wedge call right here. Because this, it's wedging up right here. I love if I'm looking at if I'm looking at all that consolidation that was up here, I'm not into that as much as once the EMAs open up and then there's a wedge. Yeah, then that's something I'm looking at. More than anything, pick your pairs, whether it be 4 or 6. And if your EMAs aren't looking like this, opening up nice, let's take a break, move on to a different pair. We don't need to trade this right here. This is a hot mess. Well, actually, till about right here makes a breakout. We'll notice this, as price goes down, we're in a 30-minute snake. It's like this right here, no bueno. Just let it be, move on to the next one. Eventually it's going to make, something will jar it, makes its move. When it pulls back to, one of our main EMAs, and we have a confirmation. Again, that's for tab 29, greatest confirmation tool out there, right? So we have a confirmation, we're bouncing off an EMA, we go down here to get confirmed. So again, I'll use trend lines, pitchforks, et cetera, to help me, create an energy point, INS lines. Here's another one of your static chart support lines. Right there, right here. That was the overhaul price or high on this whole move. Your 30-minute convergence is at that SCS point. So again, if you're in tab 29, you have access to it. It's a separate indicator, kind of like INS, but there's not many of the lines, so I just leave them on my chart all the time. There's another one here. I just kind of got walked on, but sometimes a lot of times if it's the top of the run, it'll be right there. Any more questions on that? Do we know how to calculate our 5, 10, 15 on each of the time frames? Yes, no. Oops, hold on here. I got to scroll down. 125. Janelle had on the 15. Sorry, I didn't see your question earlier. On the 15-minute time frame, should I include the 30-minute and 240 EMAs? To me, I run 30-minute on. Let me show you. So if I'm running a 3 up, it's personal preference, obviously. So I'm usually running a 2-up if I'm just looking at a chart, because the 1 minute for me is entry. And I was 1 minute chart addicted for a long time. I can show you ways to make pips on the, on the 1 minute chart, www.tradingdisclaimers.com. But the waves just aren't long enough. The waves that ultimately you want to catch, even 5 minute, a lot of the moves here that when I say, hey, this is a great move, the 5 minutes getting us in the entry, but we're really trading a 15 or 30 minute wave there, 10 minute at the very least, because the 30 minute made a convergence, it's a 30 minute retrace, then we're going back down to 30 minute convergence. So we want to trade waves that are long enough for us to get in and get out, even if if tab 29 tells us we're at the wrong time, to get out and be pip positive. So on my 15-minute chart, I run the 30, more so because to me that's the middle of the road. For the most part, if I'm below the 30, I'm looking to sell. If I'm on the other side of the 30, I'm looking to buy. Again, does it negate some of the trades? Absolutely. But I don't need 400 trades in a day. You're going to get into, see if I can find a good example here. Price is going to turn over at some point, right? Well, the euro's been kind of all right, so here, not the best example because we're coming out of a news event, but price went up, our EMAs opened up. Price is turning over right here. I'm above the 30, kind of a sloppy 30-minute convergence here. It's whatever you want to call it, wave 2, wave 3. But I'm above the 30. My EMAs are all commingled, if you will, right in here. So I'm not trading in that area. I'm going to let it come down. And now we're crossing the 30. The 5, the 10, the 15 the 1 are all in the right order. Price is below the 30. We come back here. Now I'm looking to sell. I get a 5-minute HW, harmonic wave convergence. I'm up in the EMAs. That's where I'm looking. So looking at this chart from here to here, I don't like that. This was a strong move here. I'm probably not in that because we're just coming out of this kind of trash here. I know there's a news event here, so I'm not in there. Or the little bit after that, so I'm not worried about that. Here I'm kind of consolidated. I'm probably looking at that because I've pulled back. The 5's moving down a little bit, but my waves aren't bad there. And then it's kind of consolidated. Once it starts coming down here, I'm not looking at this. So here, so out of all this, I may be considering this chart like, well, let me clean that up. Like right here, and then not again until here. So all this time, which was, better part of a day, like if you look at 9 to 1800, this would be a session for me, 9 to 12 or whatever. This time of day, I'm not even on the chart. I get here 3 a.m., so you got London Open. It's coming down. I'm coming back. I'm first stepping on the chart, somewhere in this area here. I'm like, wow, those EMAs are opening up. That's, this has potential today. This could be a pair that's tradable for what I trade. And what I'll do a lot of times is I run 5-minute static HWC alerts. So when the 5-minute goes off, there's a good probability that it's going to be, that 10 minutes up there, that if you're on tab 29, that's buy into the seller, sell into the buy. And then also, if I see this pulling back here and I saw this convergence, a lot of times I'll just set a little trend line alert right here. So if price gets up to the 5, I get an alert. Hey, we're getting close to the go zone. So at the same time, I'm looking to, is there a trend line somewhere? Can I throw a pitchfork on it? This one, this kind of jacked it up as far as pitchforks, but so it kind of gives you an idea, just filtering out. So when you do get to, this spot right here, you're like, hey, okay, I got something I can trade. How are you saving the EMA settings for different charts? I just use, there's an indicator, favorites called moving average exponential. Add that to your chart. It's free. And then that added it. I have it set to do 62 by default. And you can see here I have the 124 and the 186. The 124 is the HTATF, which if you search on HTF or ATF, sorry, it'll pull it up. And you've got the 124 here and the 186 and the 124 there. And here you just set your color. Say we made it blue. The 62, I use the MA, which if you have tab 29 is one of the components that's included in tab 29. So it gives you that 62 all the time. Otherwise, you can calculate it as well. 30 minutes, 62. Once you get them on the charts, you have them. Sometimes on the 5 minute, I usually, as you notice, it's like I run them all. On the 1 minute, I just have the 1 minute on there, and then I have the other ones on there. I might click them on if price is close to them. So 30 minute 62 EMA is the middle of the road indicator. Yes. For the time frames that we generally trade, I don't trade 240, I don't trade 480, I don't trade 1 hour. There's some very strong things, and we'll go over them next time on what the 62 will tell us on the 30-minute time frame with really high probability. So it kind of tells me, like I said, is price moving down or price moving up? Occasionally price will consolidate around the 62. And we'll look at some of the the harmonic targets, because when you put harmonic targets on a 30-minute chart, you'll notice, and you start to look at them, you'll notice some pretty cool things where your consolidations a lot of times will be around your main harmonic targets. Here, consolidated between the 21 and the 34, ping, 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 and then it broke out. A lot of times you'll get a consolidation around the 89 and then it'll break out. So, but more often than not, they're on those main target areas. There's an indicator called MTF60. It was shared in the group. Okay. There's an indicator called MTF_62 EMA. So if you're looking for a 62 EMA, but if you change from 5 to 15 chart, the EMA changes. Anthony, yes, correct. So the HTATF, you can change on the fly, if you will. If I go back to 15, it's correct. But if I come over to my 5-minute chart and make it a 10-minute chart, this and this are not correct. The 10 and the 15 calculation are not correct. This and this are correct because they're part of the HTATF. So that's why I put it on a 5-minute. I know I'm not going to change off the 5-minute. My 15, I'll bounce back and forth between a 30 and a 15, depending on what I want to see. Sometimes 15 for trend lines, but 30-minute, like some of the 30-minute realities I like to see on there. But this chart, this chart I will keep it at 5-minute, so my EMAs are correct. John, yes. I mean, price likes to bounce off the harmonic 89. Here we can see it kind of cut through it, pretty much did a pass and check right here. That's 15-minute candle and then took off again. This is all the harmonic targets are strong. The 55 and the 89 when you're getting down there, going to be a couple here, but again, came down past the 72, hit it, took off from there. All right. Let's see. Any other questions here? We'll start to wrap it up. We're going to try to keep these to right around an hour. With so many of them going on, it's, if we can keep the things a little more targeted, it's easier to look back in the past and see what. So today we covered, what we're looking for. We're looking for those EMAs to spread out. When price isn't in that type of pattern, we just ignore the chart. Come back to it a little bit later, see how it's doing. Don't try to make something when they're all turning over and they're all crossed up. Yeah, price turns over at times. Yes, there are moves in there, but to me, I would rather trade when I know what the trend is, because I know that on a good 5-minute move is all I need for a day. Even an average 5-minute move is all I need for a day. And as you spend, we've got some newer people in here, some people have been around for a while. You'll come to the realization that 85 to 90 to 95% of this is head game. The charts are there. The charts do the same repetitive things over and over. You will see, I've been at this a little over 2 years with Steve for 2 years. I see new things every day. I try to keep focus. I wasn't focused early on. It cost me time. It's the importance of saying, okay, yes, I'm going to do, if we look here on the 5-minute, let's blow this up. Let's go back a little bit in time. If I say I'm going to do a 5-minute pass and check. So here the 5-minute breaks, kind of crossed here and it consolidated, but it made a nice break here. And then it came back to the 5-minute. Let's say this right here is the only trade I look for on the chart. And I have a criteria of, I'm after convergence here. So, I need to be, this needs to be a static extreme before I would even consider it. This move here, if I traded just 10 trend bars, let's say I got in a couple pips, 38. If I traded just the trend bars, it would take me here, we'd be out somewhere in this area here, 20. So there's 10, 15 pips there. You might, if you're trading a 40% line, it might take you out in here. If you're trading a 40% line, if you can get 8 pips, you're locking in 5. Again, past performance is not indicative of future results. Actually, the UJ yesterday, I'm going to go back to the UJ because it did have a couple of, and Clay used it actually, and he was using some of it last night. Here's a great example right here. So we're above the 30. We come down, and these are reloaded waves. So we had a thunderstorm here, so my waves are a little blocky. So again, this is the 13 EMA for the 5-minute chart. And it's really, for all intents and purposes, 1 minute EMA as well, 1 minute 62. So it comes down. Remember how I mentioned, if we cross down, we want to get, to the 15 or the 30. You don't have to, but just at my observations. We come back, we cross up right here, and then we come back. After that cross up, comes down, does a check. This move, other than the one I showed you, almost every time you see this move where the 5 comes up and the price comes back and it'll tag one of the 3, may pull all the way to the 30 depending on how close they are. This is what we call a slingshot move, right? Right here. So we see that this was a 30-minute convergence. So the 30 is cycling up right here. Pull back, extreme, and away you go. And the way to find it, if you will, is when you pull it, when you get this 5-minute cross, and then you come back. A lot of times it'll tag the 5 if it pulls to the 15, or if I'm trading the 10 and this is a 1.5 pip difference, I know that I'm covering that. So if it decides to do just a little jump on me, I'm not going to cover this whole distance here, but I'll risk an extra pip to know that, in 1 minute candles, if it had a nice bounce here, let's say on the 10-minute, I know that, hey, I'll risk this extra pip to know that I'm covering the 15-minute as well. So yeah, John, focus is so critical. Same thing slowed me down. Came in late. Yes, Daniel, they will be recorded. And Zoe's been doing a great job of getting them up right away. As trainers, we've committed to getting them converted and up to YouTube and over to her. So they will be up ongoing. This one, I'll convert it right away, and it'll probably be up, as soon as Zoe gets up, a couple hours or so. Pat, looking for bounces off of 5 EMA and above. Yes and no. I mean, yes, obviously you like to get an energy point where there's an INS line running through here, shredder band. There's a lot of different potential INS. But what we want is, when we're coming to that EMA, is we want tab 29 to confirm that also. Here we see 30 minutes moving up, 5 pulled all the way back. Boom. When you're trading, 5-minute extreme with impulsivity, generally you're going to get some pop coming out of there. It's going to be a trade where you can get in and out, get some, potentially make some pips, and at the very least be able to cover yourself. So, but you'll see this over and over. If you let's see, let's get the mouse up there. Here we crossed up right here. Might have been a little bit of a news event right here of some sort. Pull back past the 30 and see what we're looking at. And we know in real time, see that wick there? In real time, this was extreme. 30's moving up, pulls back. This little passage, when we get Well, even here, again, here we're consolidated, right? I'm not looking to trade that, but when it came across, the one crossed the five, or the local EMA crossed the five, pulled back, and there you go. Tab 29, the series of OCRs that Steve did last year about this time, started a little bit earlier, but was through this time period. He said, take 10-minute, a 10-1 harmonic wave convergence with the 30-minute, not an influence, which is exactly what that is right there. So he was trying to lead us to, and a lot of times you'll see they are, let's see, here's another one here where there was a 30-minute convergence right here, and Steve said, hey, let's do 10-1 convergence, which we know on the 1-minute chart this would have been a 10-1, 30 not an influence. And what we're looking at right there, retrace extreme. So he was trying to put us in the right spot. Whether he tells us or not, there's always a very calculated method to his madness. Has our best interest at heart, wants us to learn. Once your RAS starts to pick up, it's like, oh crap, yeah, the 30's coming at me. But if you're a shredder trader, you'd be looking at that knowing, it's disproportional, which is a whole nother trick bag, if you will, but way to know where you're going. But here, pulls back, bounces almost exactly off the 5. I'm sure there was an SNR line here. Pretty easy trade when you're on the 1-minute, and enough, even if we're just trading 5-minute trend bars, boom, 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 we're out right in here. 5 pip channels. Done for the day. See you later. Go lay in the pool. Get a workout in. A little bit of pool time. So I'm going to wrap it up. It's been hour 10. Hopefully that opens your eyes a little bit. We'll spend a little more time on other ways to exploit it. Next week we'll spend some time on the 62 on the 30-minute. So some things that'll kind of give us an idea where price is at, where it's going, et cetera, et cetera. So, but to me, I can look at a chart, a 5-minute chart, and know where I'm at and where I want to go. Even if I want to trade it, it's a great way. Again, 6 pairs, boom, boom. I'll do a screenshot for next time where I can look and be like, yeah, that pair's good, that pair's not. This one I'll consider. This one here, actually, when you're looking at this, if you've took the wedge course at all, there's your wedge right there. I mean, these are golden. I mean, the EMAs are opening up. Probability is 64% that it's going higher. That we're going to break out to the top. With the way the EMAs here, it's higher than 64. Let's put it that way. So, wedges are amazing. Absolutely. So more than anything, the wedges help you. You'll find that a lot of the wedge breaks, or the last move of the wedge, is going to be this basically buy into the sell, or a soft 10-minute convergence. Sometimes it won't call it till here. So you're like, oh crap, I didn't get in on it right away. But if it was one of your pairs and you were paying attention to it, a lot of times you'll find yourself in it already before the wedge even calls. So I think that's it for today. Thanks. Looking forward to the recording for complete notes. We had great attendance today. Again, thanks for everybody for coming, especially you guys in the U.S. I did these sessions so people didn't have an excuse, unless you're on the East Coast and you're driving to work at 6 a.m. It's actually 4 o'clock where I'm at. I live down in Costa Rica, so from the U.S. But that's it for this week. I'm going to sign off again. As Steve always says, life can be short. So for those that you care and love, make sure you tell them that you care and love them today, right away. So have a good day.